Shane, how's it going?
It's going, my friend. It's going. I got the tank top on, you got the coat on, so I wonder if people can guess where we are.
Uh, Something else. Two different worlds going on. But
At least you're not in Minnesota. It's probably colder there than it is in Colorado where you're sitting today.
it's been back and forth. We got the snow in Colorado lately, and the wife who's from Minnesota is finding it hard to adjust and understand that Colorado, in theory, is warmer, but we'll see. So,
You went further south and closer to the sun. So she's like, why is it colder here?
so
Mountain weather is it's an interesting thing.
absolutely. So it's May 26th, and let's just start off. You had that wheat trade, and give us an update on that.
Yeah, and I just making sure because I'm mobile here. You can see my screen, is that right?
We can.
All right, awesome. I'm gonna put on this little spotlight deal so maybe you guys can see the mouse a little better. All right, so the chart looks exactly the same as it did last time we talked. I haven't added anything to it yet, but I did close the wheat trade. So again, I was in it here. I stopped out once at 1075. I got back in when it broke higher. Went limit up on the India news. And I started taking some profits off. And I said last week, I said I'm going to probably use this white line, the 10-day moving average, as my trailing stop for some or all of the rest of the position. And it did close below the 10-day moving average on May 20th, and I closed the entire position at that point. So I closed, I didn't close it all at once, the remaining 70% roughly of the position that I had. But I started closing it as it dropped below the 10-day moving average intraday, and before the end of the day, I closed the rest of the position. So I got out with some gains overall. Not a crazy big trade, and of course, it popped the following day. So for at least one day, I was regretting my move, but now we're down here today. I'm gonna delete that arrow. So now we've moved a bit lower than where I got out. Just gonna hold some support here, it looks like. And wheat opened the day red. Now is a green candle. Cordon's flipping to the green side. Everything's rallying. We got a little bear market rally. Seems like starting today across the board. So never know. Maybe we'll get back in. I think another important thing is it held this level here. So this line connecting the higher lows hasn't been breached yet, so this thing can still continue to work its way higher, and I'll actively look for another trade. But as of right now, I am out of the wheat trade. If it gets back above this line, might be ready for another breakout higher to the all-time highs. So again, have to be pretty nimble, have to be willing to keep the stops tight, have to be taking profits when you get an unexpected upside event, and that's how you can de-risk a trade and hold on to your gains. So I'm not sure. Do you have any questions about that, or does that about cover it?
Pretty straightforward there. So I think high level, correct me if I'm wrong. We're not saying it's a bear market and this trade is totally over. It's just that you entered here, you managed that risk, got up there, took some profits, and now it's just kind of lost some of its luster.
Yeah, and to be clear, I think it is a bear market in the market overall, just not necessarily in the wheat market. Yeah, there's a bull market in the wheat and all the natural resources, commodities. I think that's where you want to be, at least right now. So we'll see how that pans out, and we'll get into the SPY and the Nasdaq charts here, I'm sure, and we'll see that the market's trying to put in a little bear market rally starting today. So I'll stop sharing my screen if you're ready to share yours. You got something queued up for us?
I do.
All right, cool. You want me to stop?
Yeah, so just turn it over to me.
All right, I don't know how to do that, so I'm gonna stop sharing and see what happens.
Perfect. Well, I've got SPY up, but the little curveball here is at SPY 2008. And I have this up for a reason, and that is we need to understand the context of what a bear market would look like if we truly are in a bear market. And if you look at 2008, so here was the all-time high. It broke below the 200-day moving average. And much like we saw, what was that back in March, I think, we had a rally higher and it failed. Similar thing here. So we hit that 200-day. And if you were to measure that from bottom to top, that was a 14% rally. And then here it rallied again. Here, get that out of there. Here it rallied again, and then finally fell hard. And the reason I bring this up is that that's how a market like this can work, is that we will get some pretty good rallies in there. They'll make you think that it's all good and clear. But as long as price remains under the 200-day, it is not all clear. And if you wanted to look at a spot and you said, okay, if you were 100% cash and you wanted to get back in, well, when would you do it? Waiting for it to recapture the average. Look what happened here. So down here, just a ton of chop, and then this sell off right there, that probably would have just, that's what you call a capitulation. So,
Yep.
you know, from top to bottom on that one, that was a 23% drawdown. So if you try to buy that chop down there and told yourself, oh, I'm holding for the long term, this is gonna be great, you had to have nerves of steel to hold it through that 20% or 23% drawdown. Now, had you waited for a reclaim in the 200-day, it ended up pulling right back to it, retested, and ended up, being pretty nice. So broke through, came back, and right here is just a phenomenal entry, and you'd have just sat in that for the next 11 plus years.
Yeah, that's a good one. I actually I charted this this area I don't know, a week or so ago in our private chat, and during that bear market, like during the time from peak to the bottom, it was down 57%. Looking at SPY, right? So from the highest peak you see on your chart right now to the lowest point on the chart right now, that's a minus 57% roughly is how much that was.
Yep.
During that time, there were 5 separate rallies of 9% or more. So the first bounce before the run up to the 200-day moving average, right, from that first bottom, that was a 9% upside, and then it dropped again back to the lows, and it rallied 14% up into the 200-day moving average before failing and dropping, and then it ran 9% up to about the 50-day moving average before it dropped real hard. And then from that next low, it rallied 20% and then dropped again to a new low. And then it rallied 27% before dropping to that last low. So, there's definitely money to be made for a trader in a bear market. But I mean, this shows you that the market can rally 20%, from its low and still not get out of bear market mode. It could still fall even lower. So again, I don't know that this bear market needs to play out exactly the way that the 2008, 2009 mortgage great financial crisis did, right? Hopefully the financial crisis type stuff is a once in a lifetime event, and none of us will have to live through anything quite as bad as that again. But I do think that, I think you agree with me, Kyle. We've talked about this a few times. The market should drop at least to the pre-COVID highs, because the economy has not improved materially since COVID. It's just been stimulated by the government, and so that's probably another 15% lower from where we're trading today. So could definitely go lower despite some material upside rallies.
Yeah, and for those that are sitting 100% cash, when you're looking at stuff like this, you always got to remember the psychology and position sizing, and that's where if you bought 25% down here, I mean, that's not the worst, right? Because you still have plenty of dry powder, and then as it stabilizes, then you get aggressive. But that also sets you up so that if you are wrong and it turns out to be a big bull market and that was the bottom, well, now you have some invested and you will get some of the nice returns as it goes up, and then you can deploy that the rest of your capital. So, with that, let's go ahead and take it back to present day. So here's where we are today, and we're rallying pretty nice. I think, what is it right now? Up about, is it 1 or 2%?
2% for the
2%.
SPY. Yep. 2% today. Nasdaq's up 3% today. So
yeah,
things are definitely a bear market rally mode. Some FOMO kicking in for people who think they're gonna miss.
Yeah. So back to relating into 08, here we are, and miles below the averages. So we have not reclaimed those. And this is a level we've been talking about. So 411 on SPY, that's the first spot. that if we clear that, I get a little bit of optimism, but it's this level right here. So kind of 426. If we close above that, then I'm thinking, all right, it's time to, feel optimistic and things are great. Let's get aggressive. But down here, this, in my opinion, is simply a, rally up maybe to that level. I think we probably are going to end up right up in here, let the 50-day catch up, and then you could see the market roll over. But what are you seeing?
Yeah, I pretty much see the same thing. I mean, that we're not even to the point where the market rallied up to, if I don't know, can you, if you can zoom in a little bit, that would be good. But that most recent peak was the day that the Fed gave all that bad news and the market decided to rally on all that bad news, only to drop super hard to a new low the following day. So I mean, we're not even above that level yet. So I'm not, people look at the market rallying 2% and think it's oh, the bottom must be in, the bottom must, it doesn't need to be in. The interesting thing though here is like it kind of looks like we put in a double bottom during the month of May. So I mean that can be the basis for a bit of a sustained bear market rally. And so, that's encouraging to say the least, but it doesn't mean that I would want to put all of my money to work down here, only to see the rally fail and fizzle out just like it has the past several times. Because, just like we just looked at in 2008, this is how bear markets work. People try to buy the dips, and all that does is brings a bunch of sellers back to the table who say,
Yep.
man, I wish I had sold the last time it was at 410, and so now it's back to 410. I got all or some of my money back. I'm selling, and I'm out. So that can keep happening for a while as we work and kind of grind our way higher. And then we can ultimately just drop to new lows again. So there's no guarantees. I think it's all about like we've said before, it's all about risk management.
Yep.
Where is your risk? How much do you want to put at risk? Define that risk before you get into an investment. That way you don't have to emotionally figure out how to get out of it when things are working against you. And just don't be overconfident. So there's a lot of room left. If the market's going to make a new all-time high, there's a lot of room to buy before we get anywhere near there. So
Yeah,
how much upside is there from right here to the all-time high?
it's a good
What?
question. So,
Well, no, just from where we are right now.
yeah, I'll get that again here. So, 24% off of the kind of the lows that were in place there. But if you entered a trade today and you're trying to get back to that level, you're looking at 18%.
Yeah, just to get back to the all-time highs.
Mhm.
And again, there's no guarantee that you're going to put in a new all-time high after that, because the market can rally all the way up there and fail.
Yeah,
I mean, I think about how many people wish they had sold at the current all-time high. When it gets back there will be sellers. I promise there
yeah.
will be sellers. So we'll see what happens.
And something to remember too, we're in the summer season now, and you've got the big portfolio managers at the institutional banks that have, manage billions, and they're on vacation. They're going out on the boat with the kids, and they've got the juniors that are sitting at the desk, and they're not going to be aggressively buying. So a lot of times during the summer, you just see volatility and sideways movement.
Yep.
So, all right, well, let's turn to Nasdaq. So I got the cues up. Kind of same thing here. We hit this level that we marked last time, and again, maybe you could get in there and take that one up, but I think just the same story again.
Yeah, we're seeing a little bit of a double bottom. Nasdaq's down way more than the S&P 500, so there's going to be more upside to capture here. It's certainly more volatile. A lot of the stocks in the Nasdaq are, down 70 and 80%. And they, before they were down 80%, they were down 70%, then fell half again. So these things have gone down a lot, and there's going to be buyers out there. The only question is how high do they push it? Again, the Nasdaq isn't back to the highs from last week where the Fed gave us all that bad news and then the market failed the following day. Yesterday, the minutes from the Fed meeting came out and didn't really say anything new. They never do. They're just an update from the prior meeting. And you get some of the details in there, and the details were that the Fed is going to stay hawkish, which means in favor of raising rates or tightening monetary policy. The Fed hasn't even started unloading its balance sheet yet. That's going to start next week on June 1st. So there's a lot of good reasons for the market to bounce a little bit here, but we are by no means in a bull market or in even an uptrending market. So I'm not getting too excited about buying too much. There's a couple companies out there that I think are interesting, and maybe we'll put a little bit of money to work since we do have quite a bit of cash and we're a bit ahead of the market overall. So I have some longs on in my personal accounts, all in the energy and natural resource space. I did buy one tech stock today. In fact, we might want to pull up this sheet. Can you think of, Kyle, can you think of any technology stock that's up or that's up for the year right now? Are there any tech stocks that are up for the year 2022 that you can think of?
No, but it sounds like you might have found one.
Get this. Can you think of any Chinese stocks that are up for the year?
Now, the only one that comes to mind, just Chinese stocks, is Alibaba.
Yeah, and pull up Alibaba real quick. Baba is down 21% year to date. Zoom out a little bit. This thing has just been in free fall ever since Jack Ma got, put under investigation a while back, a little over a year ago. So Chinese stocks all pretty much look like this, whether it's Tencent or JD or whatever. But I found one that is a technology stock in China. So a Chinese tech stock that is up for the year. And you'll like this one when you open it. It's NetEase, NTES is the symbol.
That's a nice looking chart.
Look at that, man. Yeah, so it's up about 1% for the year, I think. It is kind of trying to break out of I draw that line a little bit differently. I draw it as if it has already broken out. So yeah, I mean, my line would be from the peak to the peak, and on my chart, it has broken out. Not that highest peak either. It's the I draw it from the newest one, but yeah, that's pretty much it. Yep. So you got the 50-day and the 200 days kind of consolidating there. It's already been down much lower, and now it's up for the year, kind of breaking out. And so I took a position in that one today. I put my stop at the lows of the day today. So if it drops below the lows of the day today, I will close the position. And I'll probably use the 10-day moving average as my trailing stop for at least half of the position as it goes higher. So that's one that I think you can get away with as a trade. Again, I'm not fundamentally bullish on China or tech stocks at this point. So this is just a trade. This isn't a long-term investment idea. But again, it can work for a while. I mean, what's it from here to the peak? You got 33% of upside roughly. So I mean, you can make a little bit of money on this one if you if it goes your way. So anyway, that's one that I found that looks pretty good. There's not very many of these out there. So this is relative strength, right? When something is up or flat in light of the market being down 20 to 30%, you know that there's something a little bit different about a stock like this. So that's why I bought it.
Absolutely. Well, we'll have to do an update on that one, but I do like it. So you have a textbook breakout, and again, manage a stop in there. I think that works out well. So we'll see.
Yep.
So, all right, well, let's take a look at some of our commodities here. Oil, we always update on that, and it's been nice. It saves me time. We don't have to really update our drawing here. It's just
that looks great.
Textbook trade right there. It looks great. So, it might change some people's summer plans, unfortunately, but that's a bullish looking chart on oil.
Yeah, I heard something this morning about the US government not mandating a switch to the summer blend, which generally adds about 10 cents to the price of oil during the summer months because they change the way it's refined and the composition of the final product. I didn't really dig too much into it, but I guess I don't know why they do that if they can avoid doing it. I thought the reason they did that was because in summer months the blend needed to be different so that the engines would actually function properly. But I probably have that wrong. I probably don't know what I'm talking about, but I thought it was interesting that they're looking for any way possible to scrape 10 cents a gallon off at the pump. I also saw another headline that said they might ban oil exports from the United States again. So I don't know if that's even a good thing, because last time I checked, our refineries can't even handle the heavy sour crude that gets sorry, the light sweet crude that gets produced in the United States. We need the heavy sour stuff from Saudi Arabia and the Middle East to operate our own refineries. So I don't know how that would even help, or if it
Yeah,
would help, or if it would happen. But I seems like they're trying anything they can to get the price of oil and gas to go down, and they are not succeeding.
yeah. And I thought I saw a statistic that their refineries are operating at 92% of capacity right now. So they are pumping out everything they can. And now you're
Wow.
going into the summer driving season when demand is highest. So we'll see, but I don't see that that price is going to be pulling back. So,
No,
but
that's yeah. Be long some oil stocks.
yeah.
XLE looks great. Broke out yesterday.
Yeah, we can take a look at that one, but that's, yeah, we've talked about that numerous times and it just continues to look great. So,
Yep.
but now let's turn, gold. So, and gold's kind of interesting. So I'll get this out of here so we can see the chart here. But we talked about this last time. So it broke higher and now it's right above the 200-day. Looks like it's breathing a little bit. This isn't a great trend and it hasn't been this entire time we've been looking at it. But right now, this is a trade. This is again where you have that stop that we were talking about earlier. Put it about 1835. Get in here and you could certainly see gold work higher. I mean, trade worth taking.
Yeah, I don't know. I mean, I'm more of a buy gold because it's a chaos hedge thing and hold it for the long run. I don't really love to trade gold, and I probably wouldn't trade it here. But as long as it holds a 200-day moving average, I think it's constructive at least. If it drops back below that, all bets are off. Could easily just drop even lower than the recent lows. So I'm I'm cautious on that one, but long-term holders might look at this 200-day moving average as support for entering a longer term position. So that's that's one way to look at it. But yeah, I'm not trading gold right now. No trades for me. Do you have a position in gold right now?
No gold.
Okay.
And then here we are. So 10-year yields. We talked about it before. It needed to come back and hit this 50, consolidate a little bit. It looks
Look
like
at
we got
that.
a little bit of a bounce off of it.
Yeah.
I think price still needs some more time, just given this gap that you have between the averages, but still, I think working its way higher. It's always hard to say though, they talk so much about the Fed likes to kind of talk the market into raising rates for it. This might be one of those where things calm down, maybe inflation backs off and that rate hikes don't have to happen, but I'm not one to speculate on that. All I see here is simply yields came back, tested the average, and trend's still up.
Yeah, I'm pretty sure the Fed's going to stick with raising rates here. So, and they haven't even started unloading the balance sheet, like I said. So we'll see what happens when they start, or when they stop purchasing mortgage bonds and all the other bonds that they've been buying. I have a feeling that's going to keep upward pressure on rates. Granted, we've moved a long ways already, so they don't have to keep going up. But pull up the mortgage rate. I mean, mortgage rates are still hanging out pretty high. They just dropped to 5%.
Yeah, so just a little bit of a little blip right there coming back.
Yeah. Yeah, that doesn't reflect today's values. I think TradingView probably only updates this like once a week or something like that. But I'm just looking for the headline. There's a headline earlier today that mortgage rates had dropped by the most since US mortgage rates fall to 5.1% and biggest drop since April 2020. So we're at 5.1% and TradingView's tagging this at 5.25 right now. So they've come down a little bit further. But I don't know. I can't see the rest of the chart. You just have a little tiny piece of the chart on here. I don't know.
Yeah, here's the big picture.
Yeah, there you go. And I don't know about the moving averages on a chart like this, but anyway, but yeah, I mean, we could see a little bit of a pullback. I still think there's lots of upward pressure on rates. And that includes mortgage rates and everything in between.
Yeah. So, and then let's look just some updates here. I don't think anything worth reading into all that much, but Apple, we talked about 138. That was the level to watch. And it reclaimed it. You know, it closed or went down below here, but it's reclaimed it so far. And I'm still watching that same level. So 138 breaks that, closes below it, then all bets are off, and then goes down to maybe 110. I think Shane, you and I were on the same page on that, I think.
Yeah, pretty much. I mean, I think we're going to get a little bit more of a bounce here. I did trim the position a little bit. I didn't short didn't short any Apple on the drop below 138, thankfully. But if I did, I would have stopped out when it closed right back above 138. So it would have been a short term small loss of a trade if I had done that. So I'm glad I hadn't. But I think that the close under 138 is still bearish overall. I mean, it, might rally up to that 150 level from here, maybe even higher. But I think that 50-day moving average is destined to cross the 200 from above, and the 200-day moving average is already falling. So that's a true death cross, as they call it in technical analysis. Doesn't mean that the stock's automatically going to go down on that, but the sentiment is not good. We're in a bear market. The market's trending lower, so I don't know. No, I don't pick bottoms, as anybody who's been watching this for a long time knows. And so that's what this would be an effort to do, is try and pick the bottom right here. But I don't think the bottom is necessarily in
Yeah,
on Apple. So we can go higher, but ultimately drop to a new lower low, and it doesn't take too long for that to materialize. So see what
absolutely.
happens.
And then here's Tesla. We've talked about this one before, but look at this. So it broke below this level that we were really watching. It's going to come back up for retest. I think I'd be looking to short this thing right here. I think now that we're down here, I'd be surprised if we didn't see 550 get tested. And if 550 does not hold, I think that's where you really could see some downside from there. But I just, right now, unless I'm going short, this is not something I would want to be picking up or owning at this moment.
No, I actually priced the Tesla yesterday. My wife had expressed some interest in getting one. You can go pay $117,000 cash for a Tesla, and if you're lucky, you'll get it in November of this year, but more likely you'll get it in February of 2023. And I just can't think of a good reason to spend $117,000 on a car like that.
Well, it saves you on gas, Shane.
I don't care. I can't even wrap my mind around it. I'd rather like give away my driver's license forever and hire a driver with those $120,000. By the time I spend $120,000 on an Uber Black going all the places I go, it'll probably be 5 years from now. So I don't know, man. I'd rather just give away my driver's license, and they can stop taxing me for roads, or tax me some flat rate since I don't use the roads anymore. I don't know. The economics are out of whack. By the way, I was looking at Tesla, looking at some fun fact on Tesla the other day. I'm gonna get it wrong because I wasn't planning to discuss this, but now you brought up the chart and reminded me. Elon made, oh man, how much money did he make last year? Some number of billions of dollars. Hold on, let me see
Yeah,
if I can find this.
I remember that. I think it was something in the order of he would have made 13,000 personally per car.
No, it's a little less. It's well, depends on which cars. He made 23 billion 452,910,177 last year in 2021. That's $23.4 billion in a single year is what he made last year. If you divide that by the number of cars that Tesla has ever made in its entire existence, works out to $10,500 per vehicle. So every Tesla you see out there on the road, every single one that you see is $10,500 in Elon's pocket. So out of the 117,000 that I was going to spend, well, I wasn't going to spend, but that I could have chosen to spend on a Tesla, yeah, almost 10% of that goes directly into the pocket of the CEO. That is crazy town. I can't believe people buy this stock. I would never want to be a shareholder of a company where that high of a percentage of revenue goes directly into the CEO's pocket. It doesn't make any sense.
Yeah.
And some people will say like, oh, well, it doesn't include all the future cars. It doesn't include all the future compensation. So it doesn't, it's so grossly out of whack compared to any other automaker. Like you won't find anything even comparable to that. And the stock just deserves to be a lot lower. So anyway, oh, look at, and it's death crossing too. It does, again, doesn't mean anything. You can look back in July and it did the old death cross last year too, and it didn't. That was like a buy signal.
Yeah.
Oh, we got 15 minutes. Looks like you got a meeting coming up. All right, better get this wrapped up.
Sounds good. Well, the last thing I just wanted to hit on was Costco. And the reason I'm bringing this up is that consumer staples, they've been holding on and keeping the uptrend. But then, as here's Walmart, just not good. So Walmart traded back below this low here that was established after that earnings report. And now we're sitting here. And the reason I bring this up is that, Costco, they're going to report earnings. And the question is, will you have a similar type event? And this, in the big picture, looks like a pretty good place to get in. But you could have a couple things here where, you wait for that report to get out of the way and then be picking it up maybe slightly lower. But the question then is, or how I want to look at it is the options market. I'll just go and check to see kind of what that's pricing in. So the 460 strike, which puts you about right here, is trading for $16 that expires tomorrow. So that tells me to be even money, break even, it's going to need to trade up to, what is that, like 475-ish. So right up in this level. So they're not pricing a huge move in that situation. I'd say let that report come out afterwards. If you can get an entry down in here, if you're a long-term buyer, I think that's a nice place to be getting in on Costco. But just, food for thought on how I'd look at that stuff is you always go to the options market and kind of gives you an idea of what most of the bets are being made and how big a move they see. But, right now I think it's pricing in about 2% move, which isn't huge. And maybe that sets it up for a spot to get in, or it becomes like Walmart and from here rolls lower, and we got some pretty big downside across all markets at that point.
Yeah, I don't know. I think that big drop was just based on Walmart and Target. So I think that's already, I think it's already there as far as expecting that. So now Costco has the benefit of Walmart and Target already setting a very low expectation that's easy to beat. So as long as it's not as bad as those other ones, then, I think it'll probably rally higher. But Costco is more of a premium brand than, Walmart, and even then like Sam's Club, their competitor there. So commands a bit higher price. I think Costco is a great long-term investment if you can buy it at a fair value. Right now it still trades even, well, I did the analysis on 520. So where was it on 520, May 20th? Can you
I'll go
just
back to
find,
that.
find May 20th? That's right at the lows, I think.
Yeah,
It was like
basically. Yeah, right
right
down
at the
here.
lows. So at that value, at 400 and, $420 a share, call it. This thing traded at an enterprise value to earnings of 19.1, and I would rather not pay any more than 12 or 13 times earnings for any company, let alone, a consumer staple type company. So I think it's still pretty expensive. I think it could easily drop further. Down below the 200-day moving average means the long-term trend is now down. Doesn't mean it can't rally back up to that 200-day moving average. But again, I think we're in a bear market. I think people are having to choose between buying gas, buying milk, buying the necessities, and they're probably spending less money on whatever, ridiculous thing Costco is, whatever giant TV they're promoting a discount on, or, I don't know. Costco just seems to me like a lot more of discretionary spending, even though it lands itself in the consumer staples category. I'd love to buy this stock, but I'd like to buy it closer to the pre-COVID highs than where it is today. So I think it
Mhm.
could remain under pressure. And I don't trade earnings, and I certainly don't mess around with like buying options or anything like that. So I would stay away from this one, but we'll see what it prints.
Absolutely. So awesome. Well, with that, I'll let you get on with your day. And, thanks for tuning in, everyone. Be sure to like and subscribe, and we'll see you next week.
All right, later, Kyle.
All right. See you, Shane.